DigixDAO, investors fleet a gold-backed coin. The once obscure cryptocurrency DigixDAO, DGD, backed on gold, has rocketed in value since Thursday as investors scurry to shelter with cryptocurrencies across the board bomb in value. In the last 24 hours, the cryptocurrency market has been devalued by $100 billion, as concerns over regulation and price manipulation on the major exchange, Bitfinex, started a rout on Thursday morning. This has been reflected in major cryptocurrencies, like Bitcoin, Ethereum, and Ripple tanking in price. However, as the market rout began, DGD was the only coin out of the top 100 coins to actually increase in value. On Thursday afternoon, DGD reached a record high of $295.39, and by Friday morning the coin was trading at highs of $433.72, a 54% increase compared to the coin's value at the beginning of Wednesday. On its website, DG is referred to as Ethereum's first major distributed autonomous organization. It is a gold-based lending platform that uses two tokens, the DAO and the DGX. The DGX token represents 1 gram of London Bullion Market Association, LBMA, standard gold, with DAO tokens giving the holder voting and owning rights in DG. DGD owners can also claim fees earned from the DGX token. There are 2 million units of DGD in circulation, meaning that total market cap on Friday morning was $867,444,000. The currency has been heavily traded by investors. In the past 24 hours, $62 million worth of the coin has been traded on exchanges. Being based on gold gives the DG tokens a stable value and minimizes the wild volatility which characterizes other cryptos. It effectively tokenizes gold, and its inherent stability has probably attracted investors concerned over the state of other coins. DG's ICO took place in March 2016 and hit the 5.5 M target within a space of 12 hours. Many of the other coins have fallen by as much as 30%. On Thursday evening, Bitcoin fell below the $8,000 mark, the first time since the 25th of November, before Bitcoin value soared. By mid-December, the coin was trading at nearly $20,000, and even at the beginning of January, was still at just under $15,000. An estimated $44 billion was wiped off the value of the currency following the slide in January. This event just ignited the most important trend of 2018, that is mega bullish for gold, with the FOMC statement taking center stage today. This event just ignited the most important trend of 2018, that is mega bullish for gold. The U.S. Dollar Breakdown by Mishka Vom Dorp, Senior Portfolio Manager. Sprott USA, January 31st, King World News. Recently, we saw the dollar index, the DXY, which measures the USD against a basket of the world's major currencies, break below its support of 91 for the first time since January of 2015. This event may signal the most important trend of 2018, the breakdown of the dollar, see chart below. 2018's most important trend, US dollar breakdown, figure 1, daily dollar index, DXY, source, Thomson Reuters. Icon. The recent drop of 0.96% was the second largest drop in over a year, and caught many traders by surprise given the recent strong U.S. retail sales data, which increased their expectations of a rate hike in March to 75%. Looking back over the past year, one can see there is a strong inverse relationship between gold and the dollar, which has only strengthened over the past month. I believe the recent slide below support levels opens the door to a rally that could be similar to what we saw in the early 2000s, when the DXY broke down from 120 and fell all the way to the low 70s in 2008. See chart below. Figure 4. Gold, yellow, versus DXY, purple. Source, Thomson Reuters icon. So, where does gold go from here? There are two major factors which I believe influence gold. The aforementioned dollar and real interest rates, which is the nominal rate set by the Fed minus inflation. A weaker dollar obviously means a stronger gold price in dollar terms, but the real rate's influence is a bit more convoluted. Since both treasuries and gold are seen as safe haven assets, investors who are worried about market risk have a choice to park their savings in a risk-free asset that has a yield, treasuries, or one that does not, gold. If real rates are positive, investors will likely favor treasuries since they provide a yield above that of inflation. However, when the inflation rate is greater than or equal to the nominal rate, investors prefer gold, since parking cash in treasuries yields negative return. However, despite the Fed's efforts to manufacture inflation through historically low interest rates and large-scale asset purchase programs, we still have yet to see the Consumer Price Index, CPI, rise significantly. Hence, real rates have remained in positive territory. The best way to view real rates is by looking at the yields of Treasury inflation protection securities, TIPS, where the principal is adjusted up and down based on CPI data. Looking at the 10-year TIP, one can see the inverse relationship of TIPS to gold. See chart below. Figure 5. 10-year TIPS, orange, versus U.S. gold spot price, yellow. Source, Thomson Reuters icon. What arguably sparked the end of the 5-year bear market in gold was the fall of the TIPS yield from 0.7% in January 2016 to negative real interest rates by July 2016. Since then, the 10-year TIPS yield has bounced off the bottom to 0.53%. With the recent decline in the dollar, from a U.S. consumer's perspective, foreign goods and services will now cost more than they did a year ago, considering the dollar has declined over 12%. With over 27% of the U.S. GDP made up of imported goods and services, the effects will be felt far and wide. Though inflation takes time, there is a very good chance we could see real interest rates begin to decline over the coming year. Though it is likely the Fed will attempt to counteract inflation by raising rates, it is anticipated that President Trump will stack the deck with more dovish board members, with the 3 current vacancies of 7 total positions. From 1945 to 2001, the average economic expansion following a recession in the U.S. was just shy of 5 years. We are now into the 9th year of expansion, and it is likely the Fed will have very little room to adjust rates down without going into negative territory once the next recession hits. For now, I believe we will continue to see a weaker dollar, more inflation, and a less aggressive Fed. This combined should all be positive for gold and the miners that extract the yellow metal. The bull market, which started in 2016, is now once again in full swing, after a lackluster 2017. For those investors sitting on large cash positions, I believe now is the time to consider deploying funds into quality explorers, developers, and producers. Started a rout on Thursday morning. This has been reflected in major cryptocurrencies, like Bitcoin, Ethereum, and Ripple tanking in price. However, as the market rout began, DigixDAO was the only coin out of the top 100 coins to actually increase in value. On Thursday afternoon, DigixDAO reached a record. Backed on gold, has rocketed in value since Thursday as investors scurry to shelter with cryptocurrencies across the board bomb in value. In the last 24 hours, the cryptocurrency market has been devalued by $100 billion, as concerns over regulation and price manipulation on the major exchange, Bitfinex.
Audio Jungle.
DigixDAO, investors flee to gold-backed coin. The once obscure cryptocurrency DigixDAO, DigixDAO, high of $295.39, and by Friday morning the coin was trading at highs of $433.72, a 54% increase compared to the coin's value at the beginning of Wednesday. On its website, DigixDAO is referred to as Ethereum's first major distributed autonomous organization. It is a gold-based lending platform that uses two tokens, the DAO and the DGX. The DGX token represents 1 gram of London Bullion Market Association (LBMA) standard gold, with DAO tokens giving the holder voting and owning rights in DigixDAO. DigixDAO owners can also